Hey everyone, thanks for checking out this video. My name is Travis from Master the Market, and I wanted to make this quick video to talk a little bit about pump and dumps in the stock market, and more specifically pump and dumps in the penny stock market. So first and foremost, for those of you who may not know, a pump and dump is essentially when a group or when multiple groups of traders, whether that be through some kind of stock promotion, alert service, or even some kind of trading chat room with, thousands and thousands of traders in it, if they all start to come together and pretty much simultaneously buy into these stocks, that's going to inevitably push the stock's price higher because of all that increased demand. And when the stock then starts to run higher, it's going to pop up on the radar of other traders through their screeners or even on the top percent gainers for the day. And that's of course going to bring even more demand from these other traders that are now seeing the stock. And eventually what's going to happen is the traders that got into this stock first and the ones that initially started to pump the price of the stock up higher are then going to sell to these people that are buying into the stock far too late, and they're going to lock in their profits while these people that are chasing up at the highs end up taking a big loss once that demand starts to shift over to supply and the price gets dumped back down to lower levels. So anyway, the reason that this is most commonly found in the penny stock market is because penny stocks are much more easily manipulated, mostly due to the lack of volume. So because we had a really good example of this over the past week with the stock symbol WEI, I wanted to make this quick video to talk about a few things that you can look for in a stock to hopefully help you determine whether or not that stock is in a pump and dump, and that way you can avoid buying into the stock at the highs and taking a loss on the trade once the pumping is over and the stock starts to dump back down. So with that being said, the first thing that you want to look for is volume. Now, naturally, when a stock is spiking up, whether it's a pump and dump or even if it's a valid move in the market, it's going to have a larger amount of volume than it typically does on any given day. However, with that being said, if you look at a stock's history and you see that, for example, maybe the stock only trades about 10 or 20,000 shares on any given day, but then pretty much out of nowhere, the stock starts to spike up and it's trading tens of millions of shares on one specific day, that is often a sign of a pump and dump because, like I said, these pump and dumps typically happen in penny stocks that trade very thin volume on any regular day because those are the ones that are going to be most easily manipulated, and it's going to be easier for these pumpers to push the price of that stock up in the first place. So anyway, if we take our example with WEI that again spiked pretty big over the past week, and by pretty big I mean that it spiked from about 80 cents per share all the way up to a high of $10.20, including its extended hours trading. And if we go over here to the left side of the screen, we have our daily chart, and you can see that on any given day before that spike actually happened, if we hover over these different daily candles, and if you look at the volume on the upper right hand side of the chart, you can see that pretty much on any given day the stock trades, 28,000 shares, for example, on this day, 50,000 shares on this day. We have a pretty big spike in volume on this day, and it still is only trading 81,000 shares. However, if we fast forward to the day of the pump, you can see we hover above that candlestick, and on this day it traded 126 million shares. So obviously that's a huge spike in volume, and that's a very abnormal spike in volume, which again is often a sign of a pump in the stock market. And this actually pretty much goes hand in hand with the second thing that you want to look for when you're trying to identify if a stock is currently in a pump and dump, and that's going to be the social media interaction. So believe it or not, social media interaction can actually be a big factor in whether or not a stock is being pumped. And the reason for that is because a lot of new and inexperienced traders see that these big well-known traders are constantly mentioning a single stock, and because of that they take it as a recommendation to buy the stock. And simply put, that's kind of how these stock pumps can actually start, just from social media interaction. So one way to actually check in on the social interaction of a stock is to actually go over to StockTwits. Now, personally, I don't use StockTwits, and I highly recommend against taking any trading or investing advice from StockTwits because it does seem to be generally filled with pretty inexperienced traders. However, with that being said, you can use it to get an idea of how the social media interaction is currently for any given stock. So if we take our example again and search in WEI, on the page for this specific stock, what you can do is actually click on the message volume, and it's going to give you a chart of the volume of how many mentions of this stock were posted here on StockTwits over the past month or so. And you can see that up until the time that it was pumped, there was pretty much 0 messages posted in this board for the stock symbol WEI. Then once that pump and dump started, you can see that very quickly the messages shot up from about 0 per day all the way up to almost 5,000 messages in a single day. And because the market is moving on supply and demand, a higher amount of demand is going to push the stock price higher, and vice versa. A higher amount of supply is going to push the price of the stock lower. More often than not, when you see such a huge spike in demand and a huge spike of interest in this given stock, inevitably there's going to be a breaking point and it's going to switch over to the opposite side. So that means that that demand is eventually going to switch to supply, and that's when the dump in the stock is going to start taking place. Okay, so those two things alone can be very helpful in hopefully helping you spot a pump and dump in the market. However, the third and the last one is actually going to be probably the most important when it comes to looking for a pump and dump, and that's going to be some kind of news or press release, whether it be something like an earnings report. If the company is running trials for some kind of treatment or drug candidate, that can be a great piece of news or catalyst. Maybe they got some kind of patent or they're having some kind of collaboration with a bigger company. All of those things are valid pieces of news that can drive the price of the stock higher. However, one thing that WEI did not have when it comes to this big spike in the price of the stock is a piece of news. So if we go over to Yahoo Finance, you can very quickly see if there's any kind of news or press release being put out by the company that actually validates the move in the market. And in this case, the most recent piece of news happened 3 days ago, which in this case was just after that pump actually took place. And prior to that, there was nothing for over a month. So with that being said, obviously there was no piece of news or press release that actually led to the price of the stock being pushed up. So you can safely assume that it was pretty much pushed up by the random spike in volume that took place once the pumpers actually started to push the price of the stock higher. And actually what happened in this case is this press release that happened 3 days ago, after the stock had already spiked up, is the company put out a press release basically saying that they have no idea why the stock is spiking up in the first place. And the reason that they decided to do that is because if the stock had continued to spike up the way that it was, eventually it's going to draw a lot of attention to the stock, and it's going to draw a lot of attention to that company. And the SEC is going to start questioning the company to try to figure out why the stock is having such a significant price increase. And to avoid the SEC from doing that, the company put out this press release basically saying they have no idea what's going on and they don't know why their stock price is skyrocketing. So that way the company can avoid questioning by the SEC. But essentially by doing so, they're pretty much confirming that this is just a pump and dump. And from there, the stock price, although it did get up to a high of $10.20 throughout its run, it did dump straight back down and is now currently trading at about $1.80 after being up at that high of $10.20. So obviously anybody that was late to this party and bought into this, whether it be above $5, $6, $7, $8, $9, even $10, they were dealing with large losses once the stock did start to dump back down. And that's really why I wanted to make this video, to hopefully help you get an idea of how you can spot these pump and dumps in the market, and you can be more prepared to trade them in the first place. And with that being said, you don't have to necessarily completely avoid pump and dumps because they can be a great way to make money in the market. As long as you're early to that momentum and you're trading with proper strategies and proper risk management, there's no reason that you can't take advantage of that momentum while it's still there. With that being said, you do want to make sure that you are very cautious, because when that momentum switches to the downside and the dumping starts to happen, it can be a very quick sell-off to the downside, like we saw here in this example with WEI. And actually in that case, once the momentum does shift to the downside, one of the ways that you can actually take advantage of these pump and dumps and profit from them coming down is by short selling them once that momentum does shift to the downside. Now, as always, short selling does come with some additional risks, and it's definitely not recommended for new traders. And if you don't necessarily know much about short selling, I do have a video on my channel explaining it in depth, and I'll go ahead and link that down below in the description. But essentially the way that that works is it allows you to borrow shares and sell them at a higher price. So in this example, if we take WEI, you could actually sell these shares up at $10.20 if you happen to nail this trade perfectly. And then later on, as the stock price falls back down, let's say you bought back those shares then at $2.20, which means that on your short position, you would have made $8 per share because you still bought at $2.20 and sold at $10.20. But with short selling, you're simply selling first and then buying back later. And again, this can be a great way to actually take advantage of these pump and dumps to profit from them coming back down, as long as you are aware of the risks and you are properly managing your risk along the way. So anyway, those 3 things alone can hopefully help you determine whether or not a stock is in a pump and dump. If you found this video helpful, please make sure to give it a like and subscribe to the channel so you don't miss out on future videos. And until the next one, thanks for watching and good luck with your trading.